In Chapter 15, I'm going to explain the planning of adjusting entries. We've done something like this before last semester, but it's a little bit different with a corporation. Management decisions about future business operations are often based on financial information. This information shows whether the business is making a profit or incurring a loss. Profit or loss information helps a business plan for future changes. Financial information is also needed to prepare required tax reports. Businesses may choose any 12-month period or fiscal year for reporting their financial performance. In choosing its financial year, a business will take into account the way its business activity flows throughout the calendar year. 3 Green uses a fiscal year that begins on January 1st and ends on December 31st. Therefore, 3 Green summarizes its financial information on December 31st of each year. Some general ledger accounts need to be brought up to date before financial statements are prepared. Adjusting entries are used to bring the general ledger accounts up to date. In Chapter 6, Delgado Web Services entered adjusting entries for supplies and prepaid insurance. 3 Green also makes adjusting entries to supplies and prepaid insurance. However, 3 Green adjusts these accounts as well. Merchandise inventory, accumulated depreciation, interest receivable, and federal income tax payable. The adjusting entry for merchandise inventory is unique to a merchandising business. The other adjusting entries could also be made by a service business. The adjusting entry for federal income tax payable is unique to corporations. This adjusting entry is not made for a proprietorship because taxes are paid by the owner, not the business. The first step in preparing adjusting entries is to prepare a trial balance. The trial balance provides a proof that the debits and credits in the general ledger are equal. A trial balance also provides a complete list of accounts that we may need to be brought up to date. The trial balance prepared before adjusting entries are posted is called the adjusted trial balance. In Part 1, we used a worksheet to plan adjustments. The worksheet contained a trial balance and columns to enter adjustments. Here was our trial balance, here was our adjustments column, and this is what we did last semester. Rather than using a worksheet, 3 Green uses adjusted trial balance and records the adjustments directly into the general journal. When preparing adjusting trial balance, the first thing you're going to do is write the title of each general ledger account in the account title column. You write the account in the same order they appear in the general ledger. All accounts are listed regardless of whether or not there is a balance. Listing all accounts reduces the possibility of overlooking an account that needs to be brought up to date. The second thing, you're going to write the balance of each account in the appropriate debit or credit column. The amounts are taken from the general ledger accounts. Thirdly, you will total, prove, and rule the debit and credit columns. And these should equal out before you go any further. Now we're going to go through our adjusting entries. Remember, when you have adjusting entries, 4 questions are asked to analyze the adjustments. First of all, you ask what the balances are. What should these balances be? What must be done to correct these balances? And what is my actual adjusting entry?